and like there's an asymmetrical risk for all stakeholders involved, right?
Yeah.
And that asymmetrical risk is the fact that companies will be able to create extremely deep competitive moats that are unique instead of commoditized. Consumers get the benefit of a personalized experience that meets them where they are. And ultimately, the risk is lowered in the same way that Nigel Morris and Rich Fairbanks came up with risk-based pricing back in the 80s,
Right.
which is like not a one size fits all. And so it's literally taking that risk standpoint and extrapolating it out to a full-on product, not just a credit underwriting. And so I think
I love that, by the way. That's such a good call out to another historical thing that we can use as a parallel for this, right? Because to your exact point, we can tie it together really well in here when we're talking about credit risk and just say, you know, we see innovations in all of these things, right? Like credit risk becomes something that goes from being like these monolithic buckets that you put everything into really granular risk-based pricing. And to your point, we just haven't seen that same flexibility be put in every part of the value chain for building a lending product.
yeah, and I think that there has been a proliferation of personal finance apps that had a promise of, automated money movement. You know, Andy Radcliffe from Wealthfront talks a lot about this, of like your money automatically moving to where you need it to be. And I think we're making progress there, but that kind of happens after the fact, right? Like that happens like, okay, I have some amount of money and you're going to distribute it for me, and you're going to change the risk. It's a little bit retroactive. And so I think that from a credit and lending product standpoint, like, wouldn't it be interesting if you didn't have to continuously be re-underwritten, and instead the product adapted to your life? And so I think there's a lot of examples of this. Like there's an example of, if you have a small business card product, and that small business card product was given to you at the beginning of your business, let's say, you had limited cash flow data. Well, what happens when you need to make a bigger purchase? You're going to your second or third card. And so there's a loss in transaction activity from the issuer that originally gave you the card, and the borrower experience is much more fragmented, right? Because it's all over the place. And so it would be greater if the card actually adapted to your needs. It started to re-underwrite you and modify on the fly as it was taking into account additional data. That's an example. Another example would be the fact that we used to talk about this at Green Sky often, which was that if you are going to spend at a liquor store or a casino, that has a greater risk of repayment than if you are spending at Home Depot investing in the equity of your house. Mm-hmm. Both could be a $5,000 spend, but the likelihood of repayment and ultimately the benefit to the borrower is much greater on the latter than the former. Mm-hmm. And it's because transaction types have different risks. But yet, from a capital markets perspective, we're buying whole tranches of individuals as if they're all the same, instead of looking at it on a per transaction level. Mm-hmm. And so there is some, I think, some data storytelling in this that servicing does, which is like aggregating this data, making it more personalized, creating a better experience. And then there is the lender perspective of, I'm actually creating a product that is adaptive to what my customers are doing, because it's going to change over time. I mean, right. Credit cards have had variable interest rates and variable credit limit changes over time. Like it's not like an unheard of thing, right. But it's been in a black box that hasn't been democratized for companies that want to take that one small feature and combine it with all of the other factors in the lending stack that you mentioned to create a holistically better experience that isn't just a single, point to point feature.